Hello, my name is Khubayb and welcome to my channel where I'll be sharing my experience, knowledge, and research about crypto. Before I get started, I want to make it very clear that I'm not a financial advisor and all of my videos are for educational purposes only. The first question I want to answer is why crypto? What's so special about it? And to answer that, I think we have to answer two other questions first. Why do I need to invest in the first place? And why not traditional finance? There are two primary reasons to invest: to preserve the purchasing power of your money and to grow your wealth. When talking about purchasing power, I'm referring to inflation. As more US dollars are added to the circulation, the value of each individual dollar decreases. This is the chart of M1 money supply from the US Federal Reserve's website from 1960 to 2020. Each gray bar represents a recession. Since 2008, the money printing has really gone up. As the Federal Reserve would put it, quantitative easing. And in 2020, the numbers really went crazy due to the COVID recession. This is the reason why we had a V-shaped recovery in the stock market. We had a massive recession followed by a complete recovery within a matter of weeks. Here's a chart for M2 money supply, a similar picture showing consistent growth, which has been accelerating over the past few years and once again went parabolic after COVID. This data is a few months old, but the numbers have only gotten worse since then. So this brings up the question, with such a large increase in money supply, why didn't we get massive amounts of inflation? I suspect it has to do with the velocity of money. What's the velocity of money? It refers to the number of times money moves from one entity to another. For example, if I buy an iPhone, Apple uses that money to pay one of their employees. That employee uses the money to buy a Netflix subscription. Netflix uses the money to create another TV show, and on and on and on. That same money is circulating throughout the economy. The Federal Reserve did not have to print more money. So, what happened after COVID? Everything shut down. The number of transactions between entities came to a halt and the velocity of money drastically went down. And here's how we can put it all together. To measure inflation using the quantity theory, we use the following formula. M times V equals P times T, where M equals money supply and V equals velocity of money. Let's focus on the left side of that equation. If money supply goes up and the velocity of money goes down in equal amounts, then we bring no change to the equation. So here's the velocity of money graph for M1 and M2 money supplies from the Federal Reserve's website. The velocity of money has gone down by the same percentage as the money supply has gone up by. So what are the official inflation numbers? According to the latest CPI data, Consumer Price Index, inflation is 5.3% for the past 12 months. For reference, the Federal Reserve usually targets an average inflation rate of 2% per year, which, if you look at the data, holds true for the past at least 20 years. Now, the problem is that CPI is far from perfect and usually underestimates true inflation. Not only that, our way of calculating inflation from CPI has evolved over the years. For example, if we used the same methods to calculate inflation as we did back in the 80s, it will look like this. Current inflation rate will be well over 10% per year. If we used the same method used in the 90s, it will look like this, closer to 8%. So it's really hard to believe where the inflation sits. Do you think that cost of education, healthcare, rent, real estate, or groceries has gone up by 2% per year for the past 2 decades? To bring it all together, the US dollar has lost 97% of its purchasing power from 1913, when the Federal Reserve was created, to 2020. And then COVID happened. So what is the true inflation rate that I would need to match to not lose any wealth or exceed if I want to grow my wealth? I would guess the dollar is being debased around 10 to 15% per year. That's my target if I wish to stand still. I need to target higher if I wish to go up the ladder. Now, to answer the second question, why not traditional finance? Simply, the returns are not high enough. If I look at index funds or mutual funds, they wouldn't give me enough of a return to match that 10 to 15% target. I could look into individual stocks, but that would require a great deal of knowledge, skill, and effort. Even then, the odds of me getting it right are slim. If I use the S&P 500 as the gold standard, it has yielded roughly 10% return per year for over the past 100 years or so. But everything changed in 2008. Since then, it looks like the market has been kept afloat by the Federal Reserve through quantitative easing. Here is the chart of the S&P 500 over the Federal Reserve balance sheet. Prior to 2008, the market was moving independent of monetary base, but the correlation is pretty evident since then. Here is the zoomed in graph since 2008. So if the Fed balance sheet represents debasement of currency and the S&P 500 is just keeping up with it, then is there any growth at all? To me, it seems that the S&P 500 is a good way to not lose any money to inflation, but it isn't a great way for me to grow my wealth. Growing wealth is the only way to climb up the pecking order. If that wasn't bad enough, Vanguard is predicting worse returns from the market over the next decade. Who is Vanguard? The second largest investment firm in the world behind BlackRock Capital. They currently have over $7.5 trillion of assets under management. They predict that the U.S. equities will grow by 2.6 to 4.6% annually over the next 10 years. And I'm trying to target 10 to 15% per year. Now, I'm a millennial early in my career who needs to park his greatest wealth building tool, which is my income, in a safe asset that I can understand and foresee growing over the next decade, so I can achieve financial freedom. That is what led me to crypto: desperation. There are three different ways to look at crypto in my view. Crypto the product, what are some of its features and what value does it provide for its users today? Crypto the investment tool, as in how it has performed in the past and what can be expected of it in the future. And finally, the future of crypto and how it will be involved in our daily life. So, looking at crypto as a product and the features and services it provides its users today. Bitcoin, for starters, is borderless, truly global, and I don't think many people appreciate how important and powerful that is. Someone sitting in Nigeria with internet access has the same access to the Bitcoin network that I do sitting in the United States. They don't have to go through a third party asking for permission, and I don't get any privilege for being in America. We're both on a level playing field as far as Bitcoin is concerned. Bitcoin is decentralized, meaning that there is no individual person, institution, or country that controls it. Bitcoin is the most secure computing network in the world. There are over 13,000 Bitcoin nodes located all over the world running and securing the network, and that number is growing. Bitcoin's Taproot upgrade, which is going live next month, required an approval from at least 90% of the network. Getting something approved on the Bitcoin network is harder than getting something passed in the US Congress. Bitcoin has a limited supply of 21 million, 18.8 million of which is already in circulation. Bitcoin is not deflationary, but it is disinflationary, meaning that the inflation rate decreases over time. Bitcoin currently has an inflation rate of 900 Bitcoin per day, which amounts to less than 2% per year. And after the next halving in 2024, the inflation rate will be cut in half, which will continue to happen every 4 years until all the Bitcoin has been mined. The last Bitcoin will be mined in the year 2140. The fiat system punishes you for saving money because it makes it worth less over time. And the Bitcoin protocol rewards you for saving by increasing the scarcity of it over time. With Bitcoin, a person can send billions of dollars anywhere in the world in a few minutes for a few dollars 24/7, 365, with complete confidence that their transaction is secure and guaranteed to execute. This one simple feature alone makes Bitcoin a multi-trillion-dollar asset, in my opinion. Earlier this year, Bitcoin became legal tender in El Salvador, and it is being used there in this manner to make remittance payments. With Bitcoin's Lightning Network, which is a layer 2 network, you can make microtransactions, such as buying a cup of coffee, which are carried out instantly and only cost pennies. A similar feature to send somebody Bitcoin using the Lightning Network is already live on Twitter today. One can make an argument that while this sounds great in theory, but how many people are actually using it? As of right now, the Bitcoin network is settling over $18 billion of value every day. The Ethereum network is settling over $26 billion every day. Earlier in the year, during the NFT craze, Ethereum was settling over $55 billion of value per day. Ethereum has already settled over $6 trillion so far this year and is on track to cross $8 trillion by the end of the year. For reference, Visa settled $11.3 trillion last year, and that number has been stationary for the past 3 years. Whereas Ethereum settled $1.29 trillion in 2020 and only $279 billion in 2019. There is substantial growth compared to Visa, which seems to have reached a plateau. Speaking of Ethereum, the options it presents to its users are mesmerizing. Just to name a few: NFTs, DeFi, yield farming, liquidity mining, staking, and many more. There is a massive potential for profit if you know what you're doing, which is why it's worth doing your research, learning about it, and getting involved. Sooner the better. This was just a demonstration of what's already out there and available in crypto today. Now, let's look at crypto, the financial asset, how it's performed in the past and what we can expect in the future. Bitcoin's the original crypto and hence has the most amount of historical data that one can utilize. If we look at Bitcoin's performance over the past decade, it has had a growth rate of about 200% per year for 10 years. Look at some of the competition in traditional finance over that time. Gold's performance is a joke. S&P 500 is as expected, close to its historical 10% per year. Nasdaq has performed well due to the tech stocks, and even individual stocks like Tesla and Amazon, which did really well over that time, are left in the dust by Bitcoin. One can make an argument that, well, most of these returns could be from Bitcoin's early years when it was worth very little, and the data could be skewed because of that. Here's a chart of Bitcoin's performance from as little as 2 years ago to as much as 10 years ago, and every year in between. Bitcoin has performed so well, in fact, that it's the fastest asset to reach a $1 trillion market cap. So the upside potential is great, but what about the risks? Are the profits worth the risk? To answer that question, we have to look at the Sharpe ratio, which characterizes how well the return of an asset compensates the investor for the risk taken. Every investment has a certain level of risk, whether it's stocks, bonds, real estate, or cash. And to put it simply, what the Sharpe ratio does is it provides the returns of an asset when you factor in its individual risk profile. To put it in another way, if you standardize the risk between all the different assets, which has the highest returns and in turn the best risk-reward profile? This chart shows the Sharpe ratio for Bitcoin and other assets when held for at least 4 years, which is why Bitcoin's data starts in 2014. Clearly, Bitcoin is a step above the rest and has stayed that way since 2014. What I extrapolate from this is that Bitcoin, not only is it the best performing asset of the past decade, it's also the safest asset when you adjust for the risk involved. Over the past year, institutional investment in Bitcoin has grown substantially, starting with MicroStrategy to PayPal to Square, Tesla, and more, which is likely what contributed to Bitcoin's first ETF being approved by the SEC. It's going live next week. Although it is a futures contract and not settled in physical Bitcoin, I think it's a step in the right direction with further bullish progress to be expected. Not only does the ETF expand the exposure of Bitcoin to institutions and individuals, it also validates the crypto industry by having the SEC acknowledge the asset class and provide a tool for people to invest in it. There are at least 5 other Bitcoin ETFs pending a decision by the SEC, and in my opinion, at least some, if not all, will likely be approved, including ones that are settled in Bitcoin. Bitcoin is also a more fair distribution of wealth. What do I mean by that? Over 85% of US equities are owned by the top 10%, which means that the bottom 90% of the population isn't benefiting from the growth on Wall Street. As we know, over the past few decades, the wealth distribution has only gotten worse, and the gap between the top and the bottom continues to expand. Bitcoin's distribution, on the other hand, is getting better over time. The number of wallets with very little Bitcoin continues to grow, while the amount of Bitcoin held by whales is decreasing over time. Finally, what can we expect in the future from crypto? The most compelling evidence lies in the current growth rate of crypto. To make my point, let's take a look at the internet. When it was an up-and-coming technology in the 1990s. In 1997, we had about 130 million internet users worldwide, and internet adoption was growing at about 63% per year. That was the fastest adoption of any technology in history. Nothing was adopted that quickly on a global scale. The internet adoption rate slowed down over time, and eventually we had over 1 billion internet users worldwide by 2005. Look at all the successful investments or companies of today: Amazon, Apple, Microsoft, Google, Facebook, Twitter. They're all products of the internet. Crypto today has roughly 150 million users worldwide, and that's growing at a rate of about 110% per year. And if crypto adoption rate slows down over time to match that of the internet, we'll have about 1 billion crypto users by 2024. Recognizing now where the technology trend is headed and where growth will be over the coming years provides an opportunity to get involved, understand, and buy amazing assets that may provide substantial upside in the future. Walmart and Amazon, 2 of the largest retailers in the country, are both looking for a lead in crypto product development right now. Institutional adoption of crypto is likely to keep growing with the introduction of new products that make it easy for institutions to allocate a percentage into the industry without having to worry about self-custody. More countries will likely follow El Salvador and make Bitcoin legal tender. This will likely start with countries that have weak or no currencies of their own, as it will provide an instant benefit to their population given Bitcoin's performance over time. CBDCs are likely going to be a part of our future, which stand for central bank digital currencies. China has already created a CBDC and is actively testing it amongst its population. I don't think that CBDCs are a good idea as it provides too much power to the state. But I do think that once you understand what a CBDC is and what it will mean for the individual, it will make Bitcoin that much more appealing as an alternative. Wow, that was a lot of material. Many things I've shared in this video deserve a separate video of their own, which I may do in the future. But hopefully, I have made a valid argument for crypto. This information helped me determine why crypto is a good investment for me. Now, my circumstances may be different from others. I have 0 debt, a high earning potential. I'm young enough to take risk and fail because I can work myself out of any mess I might create. So please do your own research and come to a conclusion that works best for you. Now that I've answered why crypto, in my next video I'm going to discuss how to invest in crypto. What are some of the common strategies taken by people, and I'll share what I have done as well. Until then, goodbye.